This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So just to give you a little background, I have been providing stock research and consulting for the past 30 years to professional money managers, institutions, mutual funds, hedge funds. And over the last year or so, I've started to provide research to the individual investor. And so I wanted to answer a specific question that I got. One of the subscribers brought up, I thought was a really good point, and I spent a lot of time talking about ADX on this channel. I like to look at multiple time frames and use multiple time frames together. But today I want to look at how Wyckoff, the Wyckoff approach to the market, and I'm going to go a little bit into that and give you some of the reasons why some of the patterns that I talk about are really originated from Wyckoff. And then I'm going to also show how the ADX works in conjunction with the structure or the four phases that Wyckoff looks at. So let's go ahead and get into this. I want to just use this chart, this graphic, to give you a pretty good idea. And this is a sort of a standard, up top here is basically a standard Wyckoff look, where he mentions four market phases: accumulation, the markup, distribution, and markdown. And obviously these are in blue because those are more bullish. The red is more bearish. And I'm just going to talk about a few of the, I think, minor things that you might want to be on the lookout for to give you an idea of whether you're in an accumulation phase or a distribution phase. Sometimes it's a little bit more difficult to tell. The other thing I want to do is look at ADX in conjunction with these four phases and show the differences in how ADX is acting with the four different phases. So we're going to start on the left here with this drop into a kind of a climax pattern. And if you notice what happens, we get a pretty sharp decline that immediately rallies off the low. Right, showing there's some buyers and showing some kind of a selling climax has developed after a pretty rough decline. And then in classic Wyckoff, you're not expecting this to reverse and just go up. Okay, you're expecting it to go through an accumulation phase, and he calls this the cause, because as the stock is moving sideways and forming a base, you're basically creating energy during this basing pattern that is the cause for this up move. And so in the up move or the markup phase would be the effect. And so when he's talking about the cause and effect relationship, he's saying as you form a base and work sideways, where stock is basically doing nothing and working sideways, it's actually under accumulation and moving into strong hands. And at this point, as it breaks out and starts moving up, it goes through this markup phase where you're seeing higher highs and higher lows, and it's where it starts to get a lot more, becomes a lot more interested by the public. They start to talk about it on CNBC as it's moving higher. And, this is really where strong hands like professional money managers and insiders are typically buying, and it's not really being discussed on CNBC at this point. So that's a general statement. That's not always the case. But notice a few things that happen here. So during this sideways phase, notice what happened, what he calls a spring, which is this pattern right here where we undercut this low and then make a higher bottom. This is my undercut and rally pattern right here. He calls it a spring. I look for an undercut. I just call it an undercut of support and then a quick rally and a test. And so that is a similar pattern. I mean, his teachings have been out there for ages. I've studied his work probably about 25 years ago. And so, I like to look at this, and, I don't use the same terms a lot of times. But I do like to think about it in the way that he describes. And that's going through this accumulation, and then you get a kind of a final shakeout, and then you make the higher bottom. What I want to point out during this phase is notice how I'm showing the ADX and the green and red DIs are all below this. This is a 25 line right here. They're all below 25 during a really solid accumulation phase where you're creating a big cause, a lot of potential, a lot of energy. Typically, all three lines will stay below 25 for an extended period of time. And the ADX line will be below both the green and the red for normally, not like this necessarily. It doesn't have to stay below the whole time, although when that happens, it's very bullish. But where it stays below, at least for a period. And I do like to see all three lines below 25. And then you notice as the price starts to break out, we get green DI kicking in. And in the blue line, the ADX line starts to cross above 25. And that shows that we're actually entering into a trending phase. Now, this is a pretty powerful move, these up moves and pullbacks on light volume, something to be on the lookout for. During that phase, the ADX never even comes back down below 25. Now, I was a little generous with this green line, the way I drew it. I mean, this could have certainly come back down to 25 and maybe come down even below 25. But generally speaking, when you're in a really strong up move, green is going to stay above red throughout the whole period. Every now and again, they'll come back together and kiss. But if you're in a really strong trend, normally green will stay above red. At least during that time, red will not cross above 25. So again, that's something you want to be on the lookout for. For strong trends, that's kind of what we're on the lookout for, is ADX staying above 25 or close to it. It might come down slightly below, but not significantly below. If it comes all the way down really low, then you've had a really serious correction. So, once we get up towards a buying climax, and that's where we make a pretty strong move to the upside, and then sellers come in and cause a kind of a V-top-ish type of pattern, similar to the way we made a bottom here. And then we go through the same type of phase, another cause. There are subtle differences between this cause and this cause. And this is really what I want to make sure you understand. When you're under an accumulation phase, typically, and this is where ADX can come in really handy, when all three lines are below 25, and we have low trend strength, but if they stay below 25, it's also telling you we have low volatility. And typically during an accumulation stage, the preferred type of accumulation stage, you will have a low volatility, meaning the size of the bars are smaller, the size of the swings are smaller, and you create a cause in a really low volatility environment that's also got low trend strength. And that's what's going to get all three of these lines below 25 for an extended period of time. If you notice, once we reach the buying climax stage and we start going through what he would call a distribution phase, and we're topping and we're going through this sideways consolidation pattern, we actually do a failed rally. He refers to this as an upthrust, where you break out and fail and then come back down. I kind of look at it the same way. I don't really have an undercut and rally pattern. I would just say, it's a failed breakout, where we try and break out and it just fails. And then you do make the lower high, similar to the way you make the higher low here on the undercut and rally. So this is the same pattern in reverse. It's gone through an accumulation phase, or distribution phase in this case, where it's worked sideways for a period and then tries to break out. And that failed rally is a sign that it's getting ready to probably start moving lower. And then again, the break through the ice would be the break of support in this case. He calls it jumping the creek when you go above the breakout level. So anyway, those are just his terms. The bottom line is we're looking for breakouts and rallies back to resistance. And then we go through a markdown phase. Now let's notice the difference in the distribution phase when it comes to ADX. You notice how all three lines are actually above 25 throughout that whole period. That is going to be more symptomatic of a topping phase or a distribution phase, where you could have low ADX, but notice how instead of being low and moving sideways like this, it's actually volatile. It's moving up and down under 25. Now, and it might even poke above 25 every now and again, but it can't stay above there while it's going through this distribution phase because you don't really have trend strength. You just have a lot of volatility in the DI lines, and it's creating peaks and valleys that are weak. It's a weak trend, but it has a lot of volatility. And that's real difference between this phase. So if we look at a distribution phase versus an accumulation phase, again, the real difference isn't the trend strength, it's the volatility. The volatility will be lower during an accumulation phase versus a distribution phase. And then as we go into the down phase, or what, markdown, that's the effect of this cause here, this distribution, this topping pattern that develops. And again, if you notice, we get red starting to take over, and then the ADX is actually crossing above 25, and it's lagging. We've already made a pretty strong leg to the downside. Okay, and ADX is just crossing above 25. I did that on purpose to show in this graphic because when you have a lot of volatility, the ADX is going to lag. You have to recognize that when the price swings are bigger and the size of the price bars are bigger, you're going to have lag to ADX. When it breaks out or breaks down, when there's a lot of volatility, it's not going to be as quick. So you have to rely on other things early on and know what you're looking at in price. Use the volume, but also use the MACD. Those things can be very useful, but this is very symptomatic. This type of pattern can at least give you a heads up to say, okay, we've got some volatility here. Odds are this is more of a topping pattern rather than another accumulation phase. So a lot of times you go through accumulation and then you mark up, and then you go through another accumulation phase and then break out again. So you can't assume just because you've had an accumulation phase and a markup and it starts to go sideways that it's always a top. That is not what that means. You can go and if you look at the stages like stage 1, stage 2, stage 3, stage 4, you can go from a stage 2 to a stage 3 back to a stage 2. So that's just another way of phrasing the same thing. My only point is that you can go through a markup, and then depending on how this goes through this phase, if it has low ADX and it's quality like we talk about, it could just be going through a pullback and ready for another move. So this is the reason why I really like to use ADX in conjunction with these patterns. You need to get to know this phraseology in terms of the market phases. Try and figure out where you are in each one of the time frames that you're looking at, because each time frame, not all time frames are going to be in the same. So I would kind of look at this on a weekly chart and see if you can determine where you are on a weekly, and then use the daily during the pullbacks to identify your buying setups. But so that's kind of how I think that's the best way to look at this type of accumulation, markup, distribution, markdown. Look for it on a weekly chart. And I think that's probably where you're going to find your best patterns and your best setups, especially using ADX this way. So I hope this is helpful. Go ahead and post any questions or comments. We'll see you next time.